Yo, what's going on, ladies and gentlemen? Welcome to Traders Reality. I hope you've had a good day. I've had a good day. Bitcoin hasn't had such a good day today. But the purpose of this video is to help you understand why Bitcoin dropped. Now check it. If you are new to the channel, ladies and gentlemen, be sure to subscribe because you don't want to miss out on being one of the pattern watchers who are always going to be ready to take advantage of plays like this, ladies and gentlemen. So, without further ado, let's have a conversation, guys. So what's the story? How did today happen? Now we're going to dive into three core aspects: the intention, the speed, and the trap. If you don't approach the game of trading with a structure, how are you going to understand the narrative? So let's roll to the charts. Bitcoin has taken a lovely drop to the downside. I will say it again. I am the first person that will always want Bitcoin to go higher. But when it does this sort of thing, there's always an opportunity for you to try and exploit this behavior. Whether you're a holder, whether you're a scalper, whatever it is that you do when it comes to trading, okay? There has to be a structure behind what it is you are doing. So, we're going to look at things like this. Firstly, let's consider what was happening today. Now, this was a video that I uploaded to the patrons of the channel. And this was talking about certain zones in the chart. We were considering the fact that from this move, from the downside all the way up to the current play in this zone right here, Bitcoin was in balance. Now, when I say it was in a balance, it means that they were in agreement with price. But you see, there's more behind the idea of the agreement of price. You see, many guys were probably trying to take advantage of what they call the bullish flag. Well, they sure paid the price today. The structure in this zone right here, ladies and gentlemen, took into consideration that as price was coming into the point of control, which is this zone right here, where fair value existed. Remember, this is a balance. This is where fair value is. This is the point of control where most of the transactions happened in this zone. Okay? Now, we had established that Bitcoin was likely to come down. Why? It was Thursday. We anticipate Thursday to be a midweek reversal in the charts. But we were blessed with two reversals today. And I'll get into that very shortly. We understood that something was happening in this area. And I relayed the information to help them understand why Bitcoin would come down towards these structures right here in the chart. Now, we understand them to be wicks. They are points in the chart where the market had aggressively made a presence and it triggered interest to move price to the upside. All right? We understood that Bitcoin was trading at a premium. Now, when we talk about being at a premium, we understand it from the logic of ICT, where he states that price will always go from a premium to a discount, from a discount to a premium. In order to establish something like this, you need to take the lowest point of a range and take the highest point of the range, like this, and establish the midpoint. Some of the enthusiasts of the Fibonacci's would claim it to be the 50% range. Well, I use a Fibonacci to find the midpoint, which is what you see right here. And that midpoint was 40,404. Earlier on in the stream, ladies and gentlemen, we were having the understanding that from the book map from yesterday's session was showing that if Bitcoin was going to go lower, then we would anticipate interest to come in at this point right here, this zone right here, okay? And if there was going to be any support, Bitcoin would trigger that ultimate support in this zone down here, which sits at the 39 range. Now, when we were watching the book map itself, ladies and gentlemen, we were anticipating that they were going to move price higher. What reason did we have? Well, if we actually go to the actual chart, we can understand that before the formation was going to play out, so it will be this chart right here, sorry, here we go. Look at this. This was taken from the live stream today. Okay? Now you can see that Bitcoin made its move to the upside right here. There was 1,000 $1,083 Bitcoin in this range. It kept on fluctuating between 1,150 to 1,090. That's what it was. There was a moment in the chart which they actually went all the way down to 700 Bitcoin. It'll be interesting to see if that figure is still there. But what was the question that was on our minds? Was Bitcoin going to break higher? And why did we know? Or not that we knew, but why were we in the presence of a stop hunt? What was it about the range that was making us believe that a stop hunt was going to come into play? All right. So check this out. This is the stop hunt. The stop hunt played out. They first initiated a move to the upside with the green vector candle. They snapped it back down. This is a stopping volume candle. A stopping volume candle tells you that the market is moving in a particular direction at speed. And then the intention is to try and grab as much liquidity from that range and pull price straight back into the range to avoid releasing the liquidity to the upside. You see, ladies and gentlemen, at that point in time, before all this move happened, Bitcoin was showing clearly that there was liquidity of shorts to the upside. Now we had all this margin down here. These represent the 25x traders, the guys that are putting more money up front to avoid having to use too much leverage. Unfortunately, what they are experiencing is a sad moment right now. Why? Because they had many instances to pay themselves. And this is fundamentally one of the biggest problems in trading. Price can only go up or down, yet 90% of players lose. Why? It's all psychology, ladies and gentlemen. All right? Now, what we need to understand is the structure. So, if we consider this image. Now, this was Bitcoin on the 4-hour time frame. The narrative says that price was still trading in a downwards movement. The downward formation, the downside play, momentum's pushing price down lower. This big green vector candle fundamentally is flawed. Why? Because there was no follow through. You can see that they were playing the range. No movement above the 50 EMA, not even close to it. They came into the previous vector zone right here, where they had triggered the same interest from before, where they were able to try and grab more longs at the highest point. But you see, the problem that traders have is when they see a big green vector candle right here, they think of the moon, they don't think of the actual the actual ozone layer beforehand. And the 50 EMA is the ozone layer. If you can't break this structure, ladies and gentlemen, Bitcoin ain't going nowhere. Now, we had marked off in the chart the point in the chart where we would anticipate Bitcoin to go if there was going to be a failure of the daily open. We were in stop hunt territory. Why? Because they never followed through with the green vector. Were they finished with the zone? So, the next question is this. What can we learn from such behavior by Mr. Market Maker? Well, ladies and gentlemen, I bring you to the chart. Look at what we see. Remember, the three core aspects, the intention, the speed, and the trap. These three aspects are going to help you understand how to utilize trading for profit. That's the best way. There's no other way for me to put it. I can paint it and make it look so pretty for you. I can sell you a dream. But no, I need to bring you to earth. I need to help you understand the foundations. You can see this intention to shift out of the range. How do we understand intention? Well, look, if we go from here, we understand that Bitcoin stabilized. It formed a balance. We have a structure. We marked it off. We anticipated a movement to the upside. How is that movement confirmed? By the presence of vector candles pushing price out of the zone. We achieved that. As I say to you, always wait for the retrace, because if the retrace doesn't show promise, you're likely to see the opposite thing happen. We understand that when a W formation forms, ladies and gentlemen, we are waiting for this structure to play. the retrace, and then the continuation to the upside. You see, the retrace itself can go as deep as it wants, and it can go all the way down to this point right here on this time frame right here, ladies and gentlemen, and it can form another pattern in this area and shift out again. That's exactly what it seems is happening right now. Now, if we go to the 4-hour time frame to understand the structure on there, it is clear to us that Bitcoin seems to be forming something different. What if this is going to be the development of a W right here? What would we need to assume? Firstly, Bitcoin would need to hold this range. So this is where the concept of patience comes in, ladies and gentlemen. This is where the idea of making sure that you improve the probability to happen in your favor. If they stay in this range, then Bitcoin is likely to come back up. The big violet vector candle says that volume is starting to increase to the downside, but it can also imply that it's slowing down. Why? Because there was no declaration of a red vector, which means that they weren't trying to force price down too far. They didn't transact as much as they would have liked to in this area. They've come back and recovered the green vector candle, and then they've bounced the range daily low, and now they are holding. Now, given that we've got a bank holiday tomorrow, ladies and gentlemen, Bitcoin could actually just slip to the downside. Happy days. Why is it happy days? Because then we're getting more information about the proof of this move. We need to look left and understand what could we see in the chart, and we have ourselves a couple of ranges that we need to be aware of, which we have marked off in the previous streams. I implore that you actually go and watch those streams to help you understand the development of this play today. All right? Now, going back into the smaller time frames, making reference to the 3 cores, we've established the intention. Now we need to understand the speed. Now, when I say speed, ladies and gentlemen, you need to consider how soon do they get from one zone to the next. This candlestick right here formed speed. The candlestick finished higher. Okay, it covered much ground as it made its way up. It's not like this candle right here where it was wicking and whacking up and down. There was no clear definitive direction. There was conviction with this candle, and they moved price at speed. So go and watch the stream on the 13th, ladies and gentlemen, because you will see that the time that we went live that day was at 2 o'clock, and we caught this move. Okay, speed's going to tell you a bit more information about what they're trying to do. You see, you've got to remember, if the trader himself is in a position, then Mr. Market Maker is going to want to come back to this point as soon as he can, because he's now got traders trapped. So when he moves price higher into the high block itself, where we see the liquidation points of the shorts being absorbed, what he's doing is he's taking advantage of the liquidity that is present in the chart. And that was shown by this move right here. You can see how he ranged out. We had 50x traders, 100x traders, but the 25x traders were where the money was. And you can see that they just taken some of that liquidity right there. But the narrative says that Bitcoin needs to go lower. So if you're a market maker, ladies and gentlemen, you're going to say to yourself, hold on a second, I might be able to get myself some more longs at cheaper prices. Let me bring price down lower. We've got every reason to go down lower. Why? Because there's liquidity right there for us. They don't care about your opinion of price. They care about how much of your liquidity is trying to represent your opinion of price. That's all they care about, because behind every order you see in this chart, ladies and gentlemen, there is an agreement where the market maker provides you liquidity against your position to enable you to take a profit if it does go into a profit. Where do you get your profit from when you're in a profitable position? Binance ain't going to pay you. Bybit won't pay you. That's one thing for sure. So, we've established that when you see candles hit the charts at speed, you know it's Mr. Market Maker absorbing liquidity because people are running to the chart. Just imagine, you see a big green vector candle, Moonboy's engaged. How quick is he to open an order? The same thing happened today with this red vector candle. There was a big drop. There was intention to move price down. The speed of the candle came in. Then they stabilized. We look left. We understand that the speed of this candle was to come in and take advantage of the longs that went long in this area here. That's where the liquidation zones are. So, quite frankly, this is where the 100x traders reside. This zone. This is where the 50x traders reside. And down here is where the 25x traders reside. All right? Now, we've established the intention. We understand that the speed of the candle is going to help us understand the market maker's intention. If he's trying to force price at speed within an hour, he's covering more ground in the hour candle or in the 5-minute candle, 20-minute, whatever candlestick you use. If it's appearing at speed, Mr. Market Maker is preparing to do something and he's preparing to follow through with it. Preparing to do something, intention, following through with it, speed. Now, one key aspect to today's price action, ladies and gentlemen, was the trap. How can we read the trap? So, a couple of things that you need to consider. Yes, Bitcoin came up above the 50 EMA on the 1 hour time frame. Of course, we've got the rejection of the zone in the 50 EMA on the 4 hour time frame. So we kind of know that there's not that much ground for them to move through to if they can't get through this 50 EMA. So we've already got the idea that this intentionous move to the upside may see resistance. So we've already got in our head that this could be a false move. All right. Now, when you see them form price as a balance like this is where Mr. Market Maker works his business. The key clue to this move to the downside was the presence of the stopping volume candle right here. Now, that's the key thing for this whole structure. Forget what's happened before. We're talking about what was happening at this point in time. The stopping volume candle was a key thing for us. Now, the giveaway was during the US Brinks. If you want to understand that concept, ladies and gentlemen, and understand the stop hunt, please go and watch today's stream that I did. Okay, at 2 o'clock New York time. I talked you through the stop hunt. Go into the 15-minute time frame to understand it. Look at this. Here is our structure. Mr. Market Maker aggressively hits the highs, brings it back down again. So we kind of got an idea that they're trying to trap traders. Why? Because they've got their commitment right here with the stop with the green vector candle. Big green vector candle moves up, but doesn't really go anywhere. Interesting, isn't it? The big stopping volume candle spikes the high, pulls it straight back. He's trapped the liquidity. He's just took some liquidations from the shorts and brought it back down. At the same time, he's managed to kill some longs who went long in this area here. How unfortunate. It's the sad truth. Price then comes down. We see one more hit by Mr. Market Maker into the wick. Fails to break through, comes back down again. Where did we see that, ladies and gentlemen? Right here. Now, when you see price dropping down, and you start to see the collection of vector candles appearing on the way down, you can see that they're spiking lower, coming up, spiking lower, coming up. They don't want to release the liquidity yet because they have enough people committed in this area, so they still want to have more. Mr. Market Maker will always make you put more, ladies and gentlemen, because most of the traders today were potentially preparing for a bullish flag breakout. Unfortunately, that wasn't the case. This candlestick right here pretty much triggered the bullish breakout. Okay, just look. The stopping volume candle that appeared here, the next candle was going to be another attempt to try and recover the wick. If they were going to try and move higher, we were expecting them to try and break above this zone right here. If they couldn't break above this point, then we would be only interested in shorts. Why? Because this was the key point in the chart where they had triggered more interest from traders at that point. But the narrative was saying that Mr. Market Maker was preparing to move down. Thursday, key point in the week. Okay, it's a midweek reversal. We've got the previous pool of liquidity to the downside right here. Mr. Market Maker hasn't followed through with the liquidations of the retail traders who were short in this chart right here. He's still got 25x traders down here. If he's going to come back up later on in the week or in the month, ladies and gentlemen, he's going to make sure that he gets his money's worth. Because at the point of them, before they broke out in this range right here, there was $17.5 billion worth of shorts. They broke into it and they've dropped that down to about 12 billion. Now, I'd be surprised if there's more. Okay? Now, if you go to the live stream and you watch what happened here, you can see that the candlestick itself initiated a stop hunt rise. It didn't follow through. Look at the lower time frames. You're going to understand a little bit more about it. Check this out. Stopping volume candle on the 5-minute time frame. That was the clue. How can you have so much volume coming in at this point and not actually get anywhere? All it did was recover the previous red vector candle. Look at the despicable nature of how precise they were with that red vector candle right there, as you can see it, and look at the wick. It's despicable, isn't it? because that's where they were able to sell from. That's where they were able to get more longs at lower prices, trigger interest by the retail trader from that point. They needed to break above this range right here, which was the last intention for them to try and move higher. Because if they were going to go higher from that point, Mr. Market Maker would have triggered candles at speed to move out of the zone. Then we see price come back down, recover 50% of this vector candle right here. And then they followed through with the stop hunt rise. And then the rest is history, ladies and gentlemen. Structure after structure after structure. They had bled the range and they came back and finalized and absorbed all of the liquidity that was present from this move to the upside. And look at what they did. They even blessed us with a nice little move right here with the stopping volume candle. And look at what they did. They don't leave no money unturned. Look at this, ladies and gentlemen. Green vector candle right there in the chart. Mark it off. Look at the precision. Where is it? That's despicable. Look how close they got to it. Yeah? Phenomenal. So there we have it, guys. If you've made it so far into the video, I want to thank you. At the same time, put in the comments that you survived the ear battering from yours truly. But more importantly, I hope you can take something away from this. I hope you can understand the key aspects, intention, speed, the trap, these factors which will help you understand how to exploit Mr. Market Maker's intention. If you haven't done so already, be sure to subscribe. You don't want to miss out on the pattern watchers taking advantage of Mr. Market Maker when he tries to manipulate price. You see, we're not going to be the retail traders that buy when price is rising. We don't buy at premium. We buy at discount. Get yourself over to the Traders Reality website. That's where you can get access to absolutely everything, ladies and gentlemen. You can join the Discord. You can subscribe to the channel, of course. You can download the indicators if you haven't done so already. Upon this website, you do have access to the wiki as well. That's free of charge for you. You can get all the information that pattern watchers in the Discord have contributed ever so kindly to share their experiences, but more so their understanding of the hybrid. All you need is a Discord link to access it. But more so, if you want to take advantage of the masterclass sessions in the website, there is a section that talks about becoming a member. And there's a little video in there for you as well. So, as always, mad love and respect to all you beautiful people. Go have yourselves a wonderful evening, and I truly hope that you can take something away from this. Take care of yourselves, family. Peace.